Breaking news, top stories, and everything you need to know. This is Today News USA. Stay informed with the latest updates from across the nation and beyond.
Global stock markets showed signs of recovery on Tuesday, managing to claw back a fraction of the substantial losses sustained in the previous week. The temporary calm followed the chaos triggered by the Trump administration's announcement of sweeping global tariffs. While the market's volatility appears to have eased, the political turmoil stemming from these decisions continues to reverberate, particularly between the EU and China. Across major European and Asia markets, stock indices saw a notable uptick in pre-market trading in the EU. Major benchmarks like the S&P 500, the tech-heavy Nasdaq, and the Dow Jones Industrial Average all rose by between 1% and 2%. This followed a highly volatile trading day on Monday, where the full scale of the economic impact from President Trump's aggressive tariffs became evident, with analysts projecting significant disruptions to global trade. The tariffs have already had a major toll, wiping an estimated $6 trillion from global markets over the past week alone. This sharp decline reflects the increasing fears over a trade war between the EU and its major economic partners, especially China. In retaliation, Beijing has vowed to fight to the end against any further escalations, following President Trump's threat to impose an additional 50% tariff on Chinese goods. In Europe, stock markets also showed signs of recovery. The Stoxx 600, an index tracking Europe's largest companies, gained 1% by 7:30 a.m. ET, recovering from a steep 4.5% drop the day before. Similarly, the major stock exchanges in the EU, Germany, France, and Italy saw increases of between 1.5% and 2%, after enduring significant losses in recent days. The positive momentum continued in Asia, where major indices across mainland China, Hong Kong, and South Korea posted gains of between 1% and 3%. Japan's Nikkei 225 index surged by 6%, a notable recovery after the sharp losses earlier in the week that triggered automatic circuit breakers meant to prevent a market crash. This rebound could have been bolstered by Japan's announcement that it had appointed a cabinet-level official to handle trade talks with the Trump administration, an effort to mitigate the impact of the tariff policies. While this rebound is a welcome sign for investors, the uncertainty surrounding these tariffs continues to overshadow the market. Economists warn that the global economy is far from out of the woods, and further market fluctuations are likely as the trade conflict evolves. The long-term implications of these tariffs on global supply chains, inflation, and economic growth remain unclear, but analysts agree that the financial markets will continue to grapple with volatility in the coming months. As the EU-China trade war intensifies, investors and policymakers alike will need to monitor developments closely, as any shift in the rhetoric or strategy could send markets into another tailspin. The situation remains fluid, and much depends on how the political dynamics unfold, both in Washington and Beijing.
Thanks for watching Today News USA. Don't forget to like, share, and subscribe for more updates. See you in the next report.